Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. So if you're an investor that wants to keep an eye on some stocks for the new year, this video is going over 15 stocks to watch out in 2018. So real quick, got a new change in background with my brother's statues over here. Alright, he's gone. He's kind of weird, but these are his statues. So new change in background for the new year. So let's get into some stocks that I'm personally looking out for to see what's going on with them. I normally did do a weekly recap every weekend, but I feel like that's gonna possibly end. I'm kind of just going to focus on stocks as a whole. That's going to be a topic, and then maybe during the week I'll do more like personal finance type of stuff. So that's enough talking. Let's start it off with the first stock that we're watching right now is, of course, the biggest company in the world, Apple, almost hitting that $1 trillion market cap. You can see for their past year they were up over 48%. Huge company, has very nice growth, especially with their new phones coming out. I mean, they are $1,000, but people are probably gonna get them. They do have a dividend, so that's good as well, just to hold on to. And their PE is actually fairly valued. Right now they're around 14, but their forward PE is their PE right now is 19, and their forward is 14. So that's actually a fairly priced stock. Next big dog we got going on, number 2 stock, is Amazon. Amazon is just a beast, guys. So this is Amazon. Their per share is $1,300. Last year they returned around 60%. They're a huge ass online business. I heard 50% of online sales come from Amazon, guys. So that alone is just ridiculous for the business. So they're huge online presence. Their price is highly valued if you look at their PE. Right now they're 332 and their forward is 164. So definitely one of those high players, high risk, high return, definitely a lot of volatility, but if you look at their long-term growth, I feel like they're just going to be ridiculous. So a bunch of these stocks, you're going to see that they returned crazy amounts just because in 2017 was an amazing year. And even recently, just in January alone, even since we're only 2 weeks into it, there's kind of a January effect. New year, people are optimistic and people are buying stocks. So even in the past couple of weeks, a lot of stocks are doing well. Number 3 stock that we have is Disney. I talked a lot about Disney last year, guys. You could see for last year, it was okay, definitely not as great as the overall market. So around 4.5%. 2017 was fairly flat, but I do see growth coming on when they're getting into their streaming, and of course they're starting back up their Star Wars and all that type of stuff. Their PE is right now 19 and forward is 16. So that's actually a pretty decent valuation as well. And they have a pretty good dividend. I think it's around 1.5. Let's ramp it up, guys. 4th stock we got going on, GE. Last year, horrendous year, guys. Horrible 2017, down like 40%. So they are restructuring, getting rid of some businesses that aren't making a lot of money. So I could see them having a rebound, but a little risk there with the restructuring. They do have a dividend, even though they did slice it in half. They still do have a dividend, and it is a large business. Big ol' number 5 stock, which is Visa. Visa is an awesome, huge business, credit card related, guys. As we all probably know, one of the hugest or largest credit card companies out there. Last year did very nice, way over 40%, but they have credit card transactions. So a lot of people are using their credit cards to buy whatever, especially with online sales increasing. Their PE is around 42, and their forward for next year is around a 25. So a little bit over, well, considered kind of highly priced, but with their growth, kind of understandable. So if you were looking to get into this, I would kind of wait for a dip, and then I'll probably personally get even more into it. The sixth stock that is kind of similar to Visa, same industry, a lot of people were talking about it last year, PayPal. PayPal, they were just killing it last year, guys. You could see very close to almost 100% return in just a year. They have payment transactions, huge growth. Their PE right now is 62 and their forward is 35, so kind of highly priced. If you wanted to get in, maybe wait for a dip. Number 7, guys, my personal most recent purchase, which was Corning Incorporated. You could see last year they did very nice, actually, around 40%. My personal choice, like I said, they have some good stable growth. This company is like 150 years old. They have a good dividend. I think it's around 2%. Their PE is 14 and forward is 19. So it's actually fairly valued, and they have a lot of research and development, which is good for innovation and changing the business as the times and the economy changes. Now, Corning was a stock that I was buying on another video that I did, stocks that I'm buying in January 2018. Corning, awesome business. They have a lot of glass things going on, and they actually put glass on a bunch of electronics that we have today. So if you're interested on the stocks that I was looking at for January, I'll leave a link in the description to check out. Number 8 business, guys, is Verizon. A lot of people know Verizon. A lot of people have Verizon for their phones. They're a stable company. Like you can see in the graph, they are kind of all over the place, but overall they are fairly steady. They have a great dividend, which is why a lot of people like them. I think they're maybe around 4%. Haven't checked it recently, but their dividend's very nice. And with the talks about net neutrality, if the internet is changing, Verizon is probably one of those players that are going to benefit from that change, whether we like it or not, unfortunately. But Verizon is a very safe company. Their PE is a 13 and their forward PE is a 13 as well, actually. So it is a decent play if you wanted to have a more stable and safe investment. Number 9 is a pizza stock. We got Dominos going on. Last year they were actually very nice, around 25% year ago. But come on, guys, Dominos, they sell pizza, they have good growth. And honestly, if you think of college kids, more people are going to college. That means more people are buying pizza. So I think that's what a lot of people are kind of thinking. Their PE is around a 40 and their forward is a 28, so kind of highly valued. If you wanted to get in, maybe wait for a dip. They are kind of all over the place recently, but they are on my radar. I'm getting lunch after this video, but number 10 stock to watch for the new year is Cirrus Logic. They have audio components for Apple for their iPhones. So if iPhone's growth is very good, then Cirrus Logic their business is going to do very well. Their PE is around a 13 and their forward is an 11, so fairly valued. The only risk there is, let's say, if Apple drops them, since they're kind of one of their largest suppliers, that's going to hurt their business tremendously. So do your research. Number 11 stock is eBay. eBay is kind of in the shadow of Amazon, as we all kind of know. Last year they did okay, though, of around 25%. Their PE is like dirt low. I haven't done too much research into them yet, but their PE now is a 5. 5, guys. Their forward is a 17. So they are pretty decently valued at, if you just look at PE. But I am personally seeing a bunch more commercials with eBay. I see, their growth is still there. So it's definitely something to watch. Number 12 stock is BlackRock. BlackRock is an investment firm, a very large investment company. So with more investors in the market, more than BlackRock would have larger business. One of their huge funds that a lot of people have are iShares. That's kind of the name of a bunch of their funds. So they created them, so they get, expenses and fees from that, basically. Their PE is around 18. Their forward is 20. So it's not too high up there. And they have a dividend, which is good holds forever too, so not a bad play. The next play, a lot of people were watching on this, number 13. I didn't put it for 13, unlucky. It kind of just fell on that, but maybe it is unlucky with Snapchat. Last year was just horrendous. I'm sorry. They fell on their faces. They got slammed. They are restructuring their app of how they kind of handle how they do their application with social media and stuff. They are not profitable whatsoever, and it might take a few years to get to where they want to be, but it's definitely interesting to watch. They have a huge amount of daily active users. So that's that. They have no PE, by the way, just because they're not profitable. Getting closer to the end with number 14, which is Facebook. Facebook is, obviously, everyone knows that. Very interesting. A lot of growth there. They did have a recent dip. You can see at the very end of that chart, they fell by 5%. So I actually might get into this one just to get that rebound. But it is social media. They own Instagram, so they're just a huge company. Their PE is around a 34. Forward 26, so a little high, but of course you could see that it's just Facebook, so it's not a bad play either. And big old number 15, which is Google. Everyone knows Google, everyone uses Google, great growth, basically a huge player in the internet. They do own YouTube as well, so like, come on. It's Google, but their PE is around a 37. Their forward is a 27, so a little high up there. If you wanted to get in a dip, that would be a pretty good idea. But don't go yet, my boys. We still have one more bonus stock that I'm watching, which is one of my personal holdings and kind of a favorite that I'm probably going to hold for a long time. Number 16, Johnson & Johnson. They are a safe company, no matter what the economy really does. They have a bunch of products that they sell. So they have an awesome dividend as well, which is why I love to hold them. You could see their chart even last year. They did awesome. So if you wanted to get in, not a bad idea. Maybe if it dips, kind of get into that. But this is one of my personal favorites as a safer stock. Their PE at 25, forward 18. So those are all the stocks that I picked to watch for 2018. Of course, there's a lot more out there, but those are the technically 16 that I chose. But 2017 was a phenomenal year, guys. Don't get me wrong, but do your research and don't expect 2018 to be as great as 2017. Normally, I mean, this is a bull market, and that's actually average for a bull market of around 20%. But the normal market would return maybe like 7 to 10%. So money isn't always easily made like in 2017. So those are all of the 15 stocks to watch out for in 2018, guys. If you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say, maybe the ones that you're looking at for the new year. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because I believe that we need to get a hold of our money and stop following the man. So thank you so much for watching, guys, and I'll see you in the next one.